Dangote Cement is offering investors a jaw-dropping 19% return on its new 100 billion naira debt, and that could shake up Nigeria's fixed income market in a big way. What's happening? The offer breakdown. Dangote Cement PLC has launched a 100 billion naira commercial paper (CP) offer, the first tranche under a wider 500 billion naira CP issuance program. It opened on 17 November 2025 and closes on 19 November 2025. It features two tranches: Series 1, 181-day, 16.10% discount rate, 17.50% implied yield. Series 2, 265-day, 16.70% discount rate, 19% implied yield. Minimum subscription is 50 million naira, with additional subscriptions in multiples of 1,000 naira. Proceeds from the CP will be used for working capital, covering everything from energy costs to logistics and regional operations. Why Dangote is raising these funds now? In 9 months to September 2025, Dangote Cement reached revenue of 3.15 trillion naira, up 22% year-over-year, while profit before tax skyrocketed to 1.04 trillion naira, a 150% increase. Its profit after tax also more than doubled to 743.3 billion naira. Operating cash flows surged to 1.29 trillion naira, providing solid liquidity. Notably, its borrowings dropped by 47%, from 2.5 trillion naira to 1.32 trillion naira, significantly improving its leverage. The company's interest coverage ratio also improved to 4.4, up from 3.3 in the same period last year, showing it's better placed to service its debt. The bigger strategy: what this means for Dangote. This CP issuance supports Dangote Cement's aggressive expansion. It helps cover short-term cash needs across its fully integrated operations, from quarries to cement delivery. Working capital financing is critical now due to rising input costs, energy needs, and its footprint across 11 African markets. The attractive yields reflect current money market conditions, where investors demand more for short-term corporate paper, especially from issuers with strong cash flows. Dangote Cement's credit strength is reinforced by DataPro's AA long-term rating. GCR also rates it A+ NG, citing solid earnings, but noting some risk from foreign exchange exposure. Risks and key considerations. Despite its strong cash flow, production volume declined in 9-month 2025, which could mean Dangote is relying more on price growth rather than volume growth. While the CP offers high yields, short-term instruments depend on investor demand and macro liquidity. Any drop could make it harder to fully issue the note. FX exposure remains a concern. Dangote operates in multiple African markets, which could expose it to currency risk. The use of proceeds for working capital, rather than CapEx, suggests this is not a purely growth funding move, but also a cash flow management play. What to watch next? Will both Series 1 and 2 be fully subscribed by the close date, 19 November? What macroeconomic conditions might influence the success of the CP? Interest rates, liquidity, inflation. How Dangote's liquidity position evolves after this? Will it reduce reliance on other debt? Whether interest coverage and leverage continue to improve by year-end given this cash-raising move? How the company balances working capital funding versus long-term investment in its African operations? Why this matters for investors. For fixed income investors, this is a rare, high-yield, high-grade corporate paper from a strong issuer, potentially very attractive. For institutional players, pension funds, asset managers, the short tenor plus high yield offers a way to park funds temporarily with good returns. For Dangote Cement, the issuance strengthens its working capital base, helping it support growth efforts without overly stretching its balance sheet. Final reflection. Dangote Cement's 100 billion naira commercial paper offer, with yields of 17.50% and 19%, is not just another debt move. It's a strategic funding play that reflects both the company's strength and Nigeria's broader capital market pressures. On one hand, high yields signal money market stress and the premium investors' demand for short-term corporate paper, especially from issuers with strong cash flows. On the other, Dangote's strong cash flows, falling debt, and top-tier ratings make this one of the more compelling short-term offerings in the Nigerian debt space. If the offer succeeds, Dangote fortifies its capacity to run its business aggressively, managing input costs, scaling regionally, and maintaining working capital resilience. If not, it may face a liquidity pinch, though its recent results suggest it's more than capable of handling the pressure. Ultimately, for investors, this is a calculated bet, high return, but requiring confidence in one of Africa's biggest industrial titans.
Thanks for watching. If you enjoyed this update and want to stay informed with fast, reliable news, don't forget to subscribe to Newsflash 360. Hit the notification bell so you never miss a story. Your next headline